I'm Cynthia Rowland, and this is episode 70 of EO Radio Show. As many listeners who work with private foundations know, private foundations can be subject to stiff penalties for making grants to individuals under Internal Revenue Code Section 4945. If a private foundation makes any taxable expenditures, the penalty taxes are imposed on both the foundation and on any foundation manager who knowingly and willfully agrees to the expenditure. The initial tax on the foundation for a grant to an individual that is not allowed under these rules, that initial tax is 20% of the amount of the grant, and the tax on the manager is 5%. So you can see that these are very important rules for private foundations who want to make individual grants. In this episode, I'll cover these rules and the application procedures for private foundations that wish to make scholarship grants to individuals. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Internal Revenue Code Section 4945D3 provides that the term taxable expenditure means any amount paid or incurred by a private foundation as a grant to an individual for travel, study, or other similar purposes by such individual, unless the grant satisfies certain requirements. Those requirements include all of the following. First, the grant has to be awarded on an objective and non-discriminatory basis. Second, the grant to the individual has to be made pursuant to a procedure approved in advance by the IRS. And third, the grant has to constitute a scholarship or fellowship grant, which would be subject to the income tax exclusion provisions of Internal Revenue Code Section 117A, and that grant has to be used for study at an educational organization described in certain provisions of the Internal Revenue Code, basically a school. Another allowable category of grants to individuals is a grant the purpose of which is to achieve a specific objective, produce a report or other similar product, or improve or enhance a literary, artistic, musical, scientific, teaching, or other similar capacity, skill, or talent of the grantee. So that's the two categories, basically scholarships for study at an educational institution or grants that are intended for the grantee to use to achieve a specific educational objective. So let's talk in a little bit more detail about the basic requirements for both categories of grants, both the scholarship for an educational institution and a grant to achieve a specific objective. Both categories have to meet a couple of other requirements that I mentioned a few minutes ago. The first requirement, that it be an objective and non-discriminatory basis on which the grant is made. So the grant has to be awarded in accordance with a program that's consistent with the granting foundation's exempt status and the allowance of deductions to individuals under Section 170 for contributions to the granting foundation. In other words, it has to be a charitable purpose for the grant to the individual. Also, the applicable regulations provide that selection of grantees on an objective and non-discriminatory basis ordinarily requires three elements. One, the group from which grantees are selected to be chosen must be based on criteria reasonably related to the purposes of the grant. Second, the group from which grantees are chosen must be sufficiently broad so that the giving of grants to members of that group would be considered to fulfill a charitable purpose. And third, the group itself, the group of applicants, must be sufficiently large to constitute a charitable class. In other words, a group that's a very small number of individuals isn't a charitable class. So those are the three basic requirements for the applicant pool, and this applies to either type of individual grant procedure that we're talking about here. Talking a little bit about the criteria that the foundation uses. The IRS rules require that the criteria used in selecting grant recipients from the potential grantee pool should be related to the purpose of the grant. For example, proper criteria for selecting scholarship recipients might include prior academic performance, performance on tests designed to measure ability and aptitude for college work, or recommendations from instructors, financial need, And the conclusions of the selection committee can also draw from personal interviews as to the individual's motivation, character, ability, and potential. These are just examples in the regs, but they give you the idea of what the IRS is looking for. It's also important for any grant procedure for the private foundation to establish that the selection committee is not in a position to derive a private benefit directly or indirectly if certain potential grantees are selected over others. So that's the big picture framework of what these grant procedures need to look like. The second requirement is that the grant must be made pursuant to a procedure approved in advance by the IRS. Grants to individuals must be made pursuant to the procedure approved by the IRS ahead of time, and this application request is made either at the time the foundation is formed as part of its IRS exemption application, that's the IRS Form 1023, and the application for pre-approval of the procedures can also be made anytime later after it's already been recognized as exempt by the IRS and classified as a private foundation. A later request is made with IRS Form 8940. A link to the form and instructions is in the show notes. It's important to note that there is a significant lead time to filing this Form 8940 after the foundation has been formed. Note that Treasury regulation, the applicable reg, which is 53.4945-4D3, if you're looking for it. That reg says that if a foundation hasn't received a favorable response to its IRS Form 8940 pre-approval request within 45 days, the request will be deemed approved until the IRS responds otherwise. However, many foundations will not want to take the risk of having to unwind grants or a grant program if the IRS doesn't approve the 8940 request. So, it's important to plan accordingly. If a founder thinks that they may want to offer scholarships, it can be very efficient and cost-effective to include the request for pre-approval with the initial IRS application. That's the Form 1023. Even if the purpose of the program changes a bit throughout the life of the foundation, so long as the procedures remain substantially the same as what is represented in the pre-approval application, the foundation can rely on the original approval. I digressed a little bit there into the approval process and timing, but let's get into the weeds a little bit about the content of the application. Whether the application is made in the initial IRS Form 1023 or in a later filed Form 8940, the foundation has to demonstrate the same basic criteria. As noted above, the foundation has to demonstrate in the application that its grant procedure includes an objective and non-discriminatory selection process. The procedure has to be shown that it is reasonably calculated to result in performance by the grantees of the activities that the grants are intended to finance, and that the foundation plans to obtain reports to determine whether the grantees have performed the activities that the grants are intended to finance. There's no single procedure or set of procedures that's required under the applicable rules. The procedures can vary depending on the factors such as the size of the foundation, the amount and purpose of the grant awards, and whether one or more recipients are involved in each year. So that's the pre-approval requirement. So to recap, we've talked about the basic charitable purpose requirement, the basic approval requirement, and now we'll talk about the use requirements, what the scholarship program is intended to accomplish with the program. So the most common scholarship programs involve awarding of scholarship or fellowship grants, which would be subject to the provisions of Section 117A of the Code with respect to the individual recipient, and which grants are to be used for study at an educational organization, that is typically a school. So to backtrack a little bit to Section 117A, that's an exclusion provision that allows the recipient of the grant to exclude from his or her gross income the amount of the qualified scholarship that the individual has received. These two provisions are tied together. It has to be a scholarship or a fellowship for charitable and educational purposes, and the individual has to use it to cover the costs of their study at an educational institution. Educational organizations that qualify for these purposes are schools that maintain a regular faculty and curriculum and normally have a regularly enrolled body of pupils or students in attendance at a place where the educational activities are regularly carried on. That's the framework for a scholarship or fellowship grant for use at typically a university, but sometimes also high schools. So then there's another category of educational grants or awards, and these are grants to individuals that are not for use to study at an educational organization, but instead these are awards where the grant's purpose is to allow the recipient to achieve a specific objective produce a report or other similar product, or improve or enhance a literary, artistic, musical, scientific, teaching, or other similar capacity, skill, or talent. The grant procedures for these programs, just like the scholarships for use at a school, these also have to be pre-approved by the IRS. A recent private letter ruling for just such a award program caught my eye, and since it addressed awards for purposes near and dear to my heart, I thought I'd go over that in this episode as an illustration of how an award program would work. In Private Letter Ruling 2023-37010, that's a ruling that was published in the year 2023, the IRS stated that the applicant private foundation planned to operate a grant program to provide individual grants to actively competing equestrians within a certain age range, presumably young adults at the outset of their professional career. The purpose of the program was described as to foster, support, and develop young professional equestrians in a certain state. The geographic region was redacted from the published ruling, but it was clearly in a particular geographic region. The ruling itself noted that the foundation proposed that it would award one grant each year, with the amount of the grant to be determined prior to the opening of the grant cycle each year based on the annual contributions and earnings of the foundation's endowment fund. The foundation stated that it would publicize the grant programs on its website and social media and would submit a press release to local and regional news outlets and to national equestrian media publications. The size of the estimated pool of eligible applicants was redacted from the ruling as well, but the note about the broad media exposure, I'm sure, helped the application. In the letter ruling, the IRS described the foundation's description of the eligible applicant pool. According to the foundation, the applicant must be an actively competing equestrian between certain ages as of January 31st of the application year. While the age range was not stated, presumably it would be open to adults over age 18 or 21, or in any event, old enough and with enough experience to be training horses for compensation, and hence classified as a professional in the equestrian industry. The letter ruling also said that the foundation required that applicants must be a professional member in good standing with their respective national governing body of the equestrian sport. Applicants are required to be U.S. citizens or legal residents, and they must demonstrate financial need based on the applicant's current source of income and prior 2 years of sources, and it's not based on the parent's income. The applicants must reside in the specific geographic region for a minimum period of time, which was redacted from the ruling as well. And the applicant needed to showcase through the application and letters of recommendation a dedication to their equestrian sport. Another requirement, and this one I found particularly amusing, is that the applicants must convey a sensible budget plan if awarded grant funds. Now here I'm going to editorialize again. If any listeners out there are equestrians, you will realize why this is a key piece of the foundation's application process. Equestrian sport budgets are never reasonable to anyone outside the industry. It's just incredibly expensive. It's a running joke in the horse world that the best way to run an equestrian venture worth $1 million is to start with $10 million. But anyway, I digress. That's why this letter ruling was particularly interesting to me, that it was dealing with equestrians. Anyway, moving on. The next requirement stated by the foundation for its applicant pool was that applicants must also show that they possess strong moral fiber and outstanding character, as evidenced by their letters of recommendation, and must use the funds to pay for lessons, clinics, competition fees, and travel expenses to and from lessons, clinics, and competitions. The grant recipients are expected to maintain an active professional membership in good standing with their respective national governing body of equestrian sport, and the recipients were expected to provide quarterly budget and progress reports to the grant committee. The application also noted that grants were described as not renewable for any grantee. In other words, applicants could be awarded the grant only once in their lifetime. Names and personal information not pertinent to the qualities of the applicants are to be removed from the application material to ensure the integrity of the process and objectivity of the committee. No member of the immediate family or a relative of any of the foundation's officers, directors, substantial contributors, members of the selection committee, or members of the selection committee would be eligible for a grant. The letter ruling described the selection committee in some detail. The committee is comprised of a cross-section of equestrian industry professionals, including a member of the founder's family, members of the foundation staff, and members of its board of directors. Committee members will serve 3-year terms with an option to serve one additional term. members of the committee nominate new committee members 1 year prior to their term expiration. The committee is intended to continue to represent a cross-section of experience and a mix of professionals and amateurs in their respective equestrian industries. Following the award of grant funds, the letter ruling went on to say that recipients would have 1 calendar year in which to use the allocated funds. At the conclusion of the award year, the recipients would be required to submit to the foundation a detailed budget, including receipts and proof of payment within 90 days. As with all other foundations that apply for a pre-approved grant procedure, the applicant foundation described in this letter ruling represented in its application that it would do all of the following. 1, it would arrange to receive and review grantee reports annually and on completion of the purpose for which each grant is awarded. The foundation committed to investigate any diversion of funds from the intended purpose, to take all reasonable and appropriate steps to recover any diverted funds, and to ensure that grant funds held by each grantee will be used only for their intended charitable purpose. And the foundation committed to withhold further payments to any grantee until it obtained assurance that any future diversions would not occur, and that each grantee would take extraordinary precautions to prevent any diversion from occurring. The foundation committed to maintain all records relating to the individual grants, including the information obtained to evaluate the grantees. The foundation promised to confirm that any proposed grantee is not a disqualified person with respect to the foundation, that they would establish the amount and purpose of each grant as described in the ruling request, and that the foundation would undertake supervision and investigation of the grants as described in the ruling request. So based on all of the representations made by the applicant, the IRS ruled favorably that the proposed procedure met all the requirements of the applicable Treasury regs, because its representations in the application established that the grant procedure includes an objective and non-discriminatory selection process, that the grant procedure results in the recipients actually performing the activities the grants are intended to finance, and the foundation plans to obtain reports to determine whether recipients have, in fact, performed the activities that the grants were intended to finance. Like all other private letter rulings, the IRS noted in the approval letter that this determination only covers the grant programs described in it. This approval can apply to succeeding grant programs only if the standards and procedures don't differ significantly from those described in the original 8940 request. Determination letters, by the way, apply only to applicants. Any other private foundation that replicates this program would still have to submit its own application and satisfy the IRS that its own procedures would meet the standards of the applicable law and regulations. As is also customary, the applicant foundation in this 2023 letter ruling has to report any significant changes to their program to the IRS if they want to be sure that the changes they make to their award program don't adversely impact the IRS opinion. Finally, the IRS warned in the letter ruling that the foundation can't use the pre-approved procedures to award grants to any of its disqualified persons, that is, to any creators, officers, directors, trustees, foundation managers, or members of a selection committee or their relatives. Finally, the foundation must commit to keep adequate records and case histories so that it can substantiate grant distributions with the IRS if necessary. So that's all for this episode. Be sure to check out the show notes for links to more resources on private foundations and grant programs to individuals. The link to the 2023 letter ruling is also in the show notes if you want to track down and read the actual published ruling. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. Check out our YouTube channel for the full EO Radio Show playlist and subtopic playlists for areas of interest relevant to public charities, private foundations, and their stakeholders. If you have suggestions for topics that you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.